What does it take to build billion-dollar companies from nothing?
Like the 0 to 1 is just so hard. I think you want to find people with, extremely high pain tolerance that can move fast.
Etienne Boutan learned that lesson the hard way. First, as a professional basketball player chasing an impossible dream.
Unless I was making it to the biggest league, which was the NBA, I don't think I was interested. Yeah, at 20 years old, I decided I wanted to do something else with my life.
That all or nothing mindset led him to a contrarian realization that's reshaping European venture capital.
All the biggest companies in the world are consumer. So at some point, we need that.
While others fled consumer investing, Etienne doubled down, launching Intuition, a 10M euro fund betting on the next platform shift.
And we strongly believe AI is that wave that everybody has been waiting for. Half of the companies we were backing are in that space.
But here's his urgent warning for founders and investors alike.
Because if you start getting left behind, you're going to feel like your parents when the mobile came.
How does an athlete's pain tolerance unlock a winning playbook for consumer tech in the AI era? Join us for this episode of the European VC podcast as we dive deep into Etienne's contrarian thesis and discover why now might be the perfect time to bet on consumer, if you have the grit to see it through.
This was their finest hour.
Tear down this wall.
It's more than just an alliance. This is a union of values.
Let's start acting.
This show is not investment advice, and the hosts of this episode may be invested in the funds and companies featured.
Welcome back, everyone, to the European VC podcast. I have Etienne with me today. Maybe, Etienne, we should start where all good things start, which is a background on yourself and intuition.
Sure. Thanks so much for having me, Andreas. Super happy to be on the podcast. And quick background. My name is Etienne. I'm a founder and GP of an early stage fund called Intuition. We invest in pre-seed seed in European and companies in the US along the consumer stack. And I used to be a professional basketball player, turned into a founder first with a startup and second with a VC fund.
I got to ask you, you're kind of like, to me, for some reason, intuition and yourself has been on my radar for what feels like a long time. Can you tell me, and you have invested in the likes of SoWare and Odyssey and Scoreplay, Delphi, Argyle, Airbots. So, you know, those are good investments. Tell me a bit about your investment track record so far, what you've done in the ecosystem.
Yeah, I mean, I started as an angel. When I was a founder, I think I wanted to speed track everything I was learning. And I was getting interested into certain verticals and areas more than others. And putting a small check as an angel was a way for me to connect to founders, getting closer to topics I really cared about. A few investments, I ended up building a small investment club. And from that investment club, I decided I wanted to do this full time, decided how to build Intuition. But it really started out of, okay, I'm doing a few checks. Usually my checks were pretty small. I wanted to also have rationale behind diversifying my investments. And so knowing how risky startups were, I think I wanted to do, more than 10. I ended up doing with my investment club about 15. And then I think I wanted to go from, okay, I'm doing this on the side to I actually want to do this full time and be a professional about those. And with the fund right now, we invested in 10 companies already, and hopefully a lot more. I think the goal for us is to do 40 plus right now. So I think, every investment brings you a different set of expertise and even the experience that you get as an investor. So it's been super interesting.
I got to ask you, are you friends with Anthony Dannon?
We've met each other. I think he's closer to my co-GP Hugo, but what are you asking?
I just asked because I love the guy. So if
he's a great guy. I mean, a very friendly conversation.
Good. I want to ask you, professional basketball player, how do you end up becoming that? Kind of what did that do in forming you?
I mean, when I grew up, I was a very overactive kid, and I think my parents wanted to find a way for me to be tired at the end of the day. So they launched me onto trying a bunch of sports, and I think I tried everything. And basketball ended up maybe the sport where I was the best at of my abilities. And second, I grew like a lot of inspiration out of professional athletes. For me, they felt like real life superheroes. I was not really into like, playing around with toys and cartoons and stuff like that. And I was a big Michael Jordan fan, so I was like, okay, I'm gonna go full on becoming or trying to become a basketball player. I was dreaming about going to the NBA, and yeah, I started playing in my little town. That kind of became like a local superstar, and then I got into, okay, this is getting serious. At 14, 15, I got into basically the pro teams where they train young players to come up. I signed my first contract. I was 16. I became professional at 18. Played a couple of years professional in Spain, but then you also get caught up by reality. Being a professional athlete is actually insanely hard. You have to sacrifice a lot. Actually, very few athletes get to, I think, enjoy the type of stability where you make enough money to, have like your life taken care of. And even if you do make a lot of money, it's still very complicated. It's very complicated to have family. You can get injured. I personally tore my ACL when I was 18. My parents went to med school. So I got like this whole perspective of, okay, do you actually really want to do this? And for me, unless I was making it to the biggest league, which was the NBA, I don't think I was interested. Yeah, at 20 years old, I decided I wanted to do something else with my life. I often think that like my first stunt as trying to be a professional basketball player was my first startup. Like I really had to push myself. I had no agent. I had to go out there and, try to find opportunities. And I think the resilience and the pain tolerance that you build, and I think you see it a lot of times with a lot of former athletes going to early stage, like the 0 to 1 is just so hard. I think you want to find people with, extremely high pain tolerance that can move fast, care about the group, that or aligned with doing some like a mission that's bigger than themselves. And that resonated a lot. So I do admit that like when I had to transition after, entrepreneurship was kind of like the logical path for me. Basketball definitely made a lot of the person I am today. Starting 12, 13, I knew I wanted to be like really serious about it. And I stopped really playing when I was like in my 20s. So it's almost like a 10-year little career,
How would you compare being a basketball player and the drive that you had there with the drive that you now have as a VC and had as a founder before, and the drive that you see in founders building today?
Yeah, it's core. Like I think, like when I was a player, I was completely consumed by what I was doing. I admired players like, Jordan, Kobe Bryant, and I tried to mimic what they were doing, which was train like a madman. So I would wake up at 4 a.m., try to get like 3 practices per day. I wasn't the most talented, so I had to work harder than anybody else, at least. And I carried that over, but when I started, being entrepreneurship or being a founder, I think there's a lot of similarities in there because I was so driven before and I was completely passionate and obsessed with what I was doing. It's really hard to do anything else after that, unless it wasn't for you. But at least for me, it was the case. And so I did double around, like having like regular jobs. It just wasn't for me. Like I needed to have something where it's fully aligned with who I am, where I can spend, 15 hours per day doing it. And this actually the thing I prefer doing over anything else. Like this is playtime and also work for me. Like this is all in one. And so I figure there's a lot of alignment, at least in my life, doing that. And even the VC I'm doing right now, we're building that business, and it feels like being a founder again. So yeah, that's the only thing I know. It's a blessing and a curse because it feels so good to have that. But when you just don't want to do anything else.
Do you have kids, Etienne?
No, I don't. I often joke about it, saying like, yeah, like my startup was, is my girlfriend, my life. I think as I'm growing older, you realize that when you have a family with you or like the right person on your side, it's actually something that's so valuable that gets you to the next level. I think as a person, as a human, and also by extension as a founder. But no, I'm making the most of what I have right now, which is a lot of time in building my companies. But I'm totally open to the idea.
Totally open to the idea. You should be, man. I have 2 kids. I have a 7 and a 4-year-old. The biggest blessing, what I can tell you is, I very much had your profile in terms of how I live life. Also, like mine was a different sport, no way you could ever get pro in that, or at least so I bodybuilded, right, which is a super weird thing. I ended up like now I'm 74.5 kilos or so. I ended up at 105.
Wow.
Did the things that require
I want to see the
performance.
pictures after.
Yeah, yeah. But my point is that this one-sidedness to life definitely allows you to do supernatural things, so to say. But then you hit a point in life where life actually requires something else from you. Given my family situation, where my son is has a bit of autism and ADHD, which makes him like super smart, super fun, but also definitely a handful, and something we have to manage as a family. And for that reason, I've completely reset my life and I had to reorient. I'm saying I've spent 3 years trying to get out of this performative mindset to, for me to be able to really enjoy spending as much time with my family as I should.
Yeah.
Because if I am to be successful with this mission in life, I gotta reset in how I think about things.
It's
So yeah.
it's a very interesting conversation actually. So I'm 33 right now, and when I started my first company, I was 26, and I started when I started my company. Obviously, I was surrounded by other founders, same age, going through their first business. It's kind of funny because I felt like once everybody hit 30 years old, whether it was with family or they ended up being like in very poor and terrible health, they decided to reset. And I just think like the first time you get completely consumed by what you do, either it is sports or like your first company, your first job, whatever it is, you're completely overwhelmed. And for founders, 10x because you suck at everything. You have so much on your plate. You have instability, whatever it is. At some point, things get better, and then you can like recenter your way of thinking around. Okay, like this is gonna be a sprint. I have to do this for long term. There's no way I'm putting like 100 hours per week for like, I don't know, decades. Some people do, but I think it's a trade-off on potentially your health, your family life, and then it's asking you like, what do you actually want? And so you ask that question for yourself, and then you recalibrate. But I think it's very subjective at the end of the day. Like you have to design the life you want. As a founder, you get the opportunity to do that most of the time. To choose what you want to work on, the people you want to do it with, the pace at which you want to go, and that's the best part of the job. And I'm sure that resonates a lot with you as well.
Tell me about then your founder experience, and feel free to relate it back to this conversation of knowing where you want to be in life and so on. But I'd love to hear about Hex Technologies. Is that how you pronounce it? Hex Technology?
Yeah. A lot of domain names were already taken, so it's
Yeah.
X Technologies, but we changed the spell. As I was telling you, as I was transitioning from basketball, I think the hardest thing for me is I just completely lost my identity when I was a professional basketball player. I didn't go to school for 2 years, and then I got to this realization to like, okay, I need to do something else with my life. So I leveraged basketball to go back to the US. I was in an academic was on scholarship, first with sports, second with my grades. But during that process, I was like, okay, I want to go for something that I feel I'm really good at. And I think the intensity of competitive sports, I could only find it in entrepreneurship. I was in California, so you want to be an entrepreneur in tech. And I dabbled around a few things. I had like a bunch of projects that went nowhere. Back then it was 2013, 14, golden age of consumer apps. So Instagram was becoming mainstream, Snapchat, Tinder, whatever. And I was working a lot around these ideas. I was still in my 20s. I wanted to try other things. I was good in math and econ, so I wanted to try finance as well. So I became a VC, and then I became an investment manager. But yeah, I felt like I didn't tick the boxes for the corporate environment. And 2018, 19, I decided to finally take a leap of faith. I met my co-founder back then, and he had the first company before. He was convinced there was an opportunity to build something in the autonomous driving environment because you had all those car makers. You're now asking them to make software, and we thought, okay, they're going to fail. And there's got to be something we can do. We just got to find a good problem to solve, and we have a company there. And so we went to Silicon Valley, funny enough, in like 2018, looking for a problem to solve, but we had no idea what we were doing. And we got back to Europe, France, in Paris, moved there. I have no network, no nothing. I got there as a complete outsider, and yeah, started to meet as many people we could to talk about the idea or the company we wanted to build. We got laughed out a bunch of times, to be honest. We just weren't the typical founders, went to like the best business schools or engineering school. And I think at some point we even met a fund. They were trying to get rid of us, but they ended up making the intro to who would later become our CTO. He was the director of the robotics lab at Mean Tech. And we would just went there with a crazy energy, 15 ideas. All of them were terrible. And he did listen to us and ended up saying, "Hey, I don't think your ideas are good, but I have an idea. You have an energy I've never seen before. I'm willing to try it out." And he ended up taking some equity, putting some money in, and testing us. And after a couple of years, we made a bunch of mistakes. COVID happened. We crashed the company 15 times. We keep going at it. We got an MVP off the floor. We joined Techstars and Tel Aviv, the acceleration program, and moved to the US, starting having first customers. And at that point, our CTO became full-time. We ended up having a lot of traction. We had an investment vehicle from Google, which invested money into the company. And maybe in the span of 12 months, we went from going live with clients to we had arguably now the biggest AI company in the world trying to acquire us. That was like a 3 months process that was completely insane for us, considering where we came from. And in the end, the deal didn't happen, but we did take the NDA of the transaction and show it to a few VC funds, and we raised money very quickly. But yeah, that was my first experience as a founder. It was brutal. It was intense. It was a lot of ups and downs. I absolutely loved it, and really confirmed to me, at least my intuition, which was, okay, I want to be a founder. I did that for 5 years. And I think the amount of hours I put in just to make sure I was on par to like the type of companies I was building, I ended up realizing I also wanted to try my hand on new industries. And I think this is when I got to start as a business angel. I just wanted to, have like a fresh perspective on other topics, other industries. And yeah, I fell in love with things that could scale to millions of people. So I did a lot of angel consumer investments. And yeah, eventually last year I decided I wanted to do this full time, sold most of the shares of the company I created to start Intuition, a new company.
Then let's go to the Intuition chapter, because Intuition is a 10 million euro fund. You're focused on consumer, and we're going to talk a bunch about consumer. Let me first ask you about, could you describe a little bit, now it's at 10 million, but what this, you've also mentioned before, 40-ish investments is your aim. Tell me a bit about the whole origin of Intuition, the things that you really, looking back, wish you'd done differently, or the core learnings from that process.
So the idea of Intuition, I had it for years. Even when I started my first startup, X Technologies, I wanted to do it because I had an edge on the capital I could pull. I think I had a thesis on making cultural leaders, so athletes, artists, and creators to invest in tech, which was very interesting to help with, distribution or many other things. The thing is, I wanted to be a founder first. And so I became a founder. I think it gave me a lot of tools to have a lot more empathy, really understanding how you go from 0 to 1. And so that's all I knew. I wanted to be investing at the beginning in amazing founders and be a little bit the investor I wish I had when I was starting. Doing the angel investments brought me a lot of, experience in terms of, how I should invest or what's my style of investments. Also, I got to meet the co-GP I'm building Intuition with, Hugo, who at the time was introduced by one of the investors of my the little club I built. Told me you have to meet this guy. He's arguably the best angel investor on that vertical in Europe. And we met. We instantly clicked. We were investing into very similar stuff, and we kept wondering, okay, why isn't there a fund that is heavily focusing on consumer, and that is investing in the US and in Europe with this very ambitious and international approach? There are a few out there, but for us, it wasn't enough. We felt like consumer was really overlooked, especially over the past few years when, you had interest rates rising and a lot of people wanting to take a lot less risk on these kind of companies that were more volatile. And so at some point we looked at each other and we're like, okay, let's build it.
Uh-huh.
And so I think we have
And maybe just to back you up on that, I think yes, there's a lot that don't want to touch consumer, both on the LP side and the VC side. Two, even the firms that have kind of built their reputation in consumer, many of them have actually pivoted a bit away from consumer or doing less. We had Christian Meerman from Cherry on the podcast. He said it, like, we're actually doing less in consumer now. And that story is repeated many places. So I think you're absolutely right in what you're saying, that consumer is not the hardest thing in European venture.
It's definitely not the hardest thing. It's very polarizing. I think it's also a job, whether you're a founder or an investor, that it's meant for contrarians. So we felt very comfortable about that, and that's totally fine. But at least when we started having the idea, we were like, okay, let's build it and figure out a way to make it work, because we're not going to deny that there were a lot of things that are super hard about building what we're building. And I think we also learned a bunch of things along the way. But for us, at least, it was like, okay, so to do a proper consumer fund, you need to do a few things. First of all, you need to create a fund that's going to be diversified enough to take on the volatility of consumer investments. In general, consumer investments, they will return you more money, but you will have less exits. And so for that model to happen, you want to take more shots on goals. To be able to do that, usually you want to go earlier, to do more volume with smaller checks and be very agile. And so for us right away, it was like, okay, we see a template of that type of fund working for us, which is pre-seed seed, large volume, so 40 plus, but not too much volume so that we kill the brand of, oh, you're just the fund that give money to everyone, and move forward with this. Along the way, we realized the inflection point towards consumer was really big. And so we did extend our thesis to, okay, we're doing pure consumer plays, about like 1/3 of our investments, but we're also going to do prosumer tools, so tools that you use every day at work, sold to businesses, and B2B2C type companies. So customer enablement and all those things.
Was that, Etienne, based on the realization that consumer was actually, you felt it was too small? There were too few opportunities of high quality that you wanted to back, at least in your deal flow, maybe not in all of Europe, but the portion of Europe that you're able to attract, you didn't see enough in pure consumer.
No, I think there's the volume for 10 plus per year for sure. I just think as an investor pitching your fund to LPs, you also need to bring more reassurance in terms of, okay, we also back business models with steadier cash flows and less volatility.
So is that, let's unpack that, because that can be driven by an LP profile reason, meaning some just don't like consumer or they don't have a background in consumer, so for that reason they don't relate, which means it's not as much about strategy and potential returns as it's just about kind of what people get excited about. It can also be driven by a portfolio model perspective that you're saying, well, this hit and miss profile of consumer, and all of them oftentimes take quite a long time before they IPO and exit. So for that reason, you also want to do something that has maybe a shorter exit horizon. You want to have a mix of a portfolio that's maybe with a little less risk than the pure consumer play. What drove that decision? Do you feel it was more that you need something to kind of satisfy?
Yeah, no, it's obviously a little bit of everything. I think as a fund manager, like I said, we're building a business. You want to sell a product, and today the product that we sell is an investment portfolio of 40 plus companies with whatever strategy that you have. And so your customers or the LPs you're selling the product to, but then you need also to perform the capital allocation, and there your customers are the founders. And so it's this dance that you have to do between founders and LPs who are expecting different things, because we also want it to be a clear consumer and cultural type fund where we have a brand that's polarizing and that the founders know, okay, they know what they're going to get from us. They're going to get curation on the type of LPs we bring in, the types of events we throw, the types of content we post, the type of intros we can make. And we wanted to make sure wanted to make sure that founders knew what we're bringing to the table. On the other side, like I was mentioning, there's also, like when you're an angel, to be honest, you don't really realize what it takes to return a fund. When you plug it into a model, then you're like, okay, this is what it's going to take. Like, I actually need to find this amount of outlier. And very interestingly enough, when we did our market research with Hugo, we figured that over the past few years, you had a bunch of companies that went really quickly from consumer to B2B. You can, for example, there's an example that works really well is Skype in the 2000. And then we had Zoom in the 2010s. It took 10 years for that technology to really transition from consumer to enterprise. Today, you have companies that do it in a snap of a finger. If you think of, ChatGPT for OpenAI, for example, they serve really properly both consumer and enterprise. And so we saw that trend coming and we were like, okay, we have a clear use case right now for companies that can return a lot of money, targeting very different industries with less risk and more diversified business models. And so it's kind of like the injection of all those things as we move forward. But yeah, it ended up being, the thesis that we have right now.
And let's unpack the thesis and go into that part of this conversation. You boldly say that now is actually the right time for consumer and venture.
Yes.
And if we look at your first point in that, you have a beautiful manifesto. We'll put it with the show notes here as well. But you're saying first and foremost, let's just hammer home the point: consumer has been largely overlooked for years.
I give my co-GP Hugo a lot of credit for all the content he's been posting out there, and for anyone interested into what we're building, I highly suggest reading everything he's writing because it is at the core of everything we believe in. But the very start was when we were angel, we will deploy capital into companies where we had little to no competition. We built brands personally as investors where we could get allocations very easily. And we felt that founders had less favorable terms from lead investors or whatever it was, which meant that you could get into great teams at lower prices. And that's just a pure arbitrage opportunity of what you do as an investor. And I think that's I touched on it a little bit before. Interest rates rose, so people's willingness to take risk decreased. And so kind of like irrationally, you want to do less startups as an asset class. You want to do less early stage and you want to do less consumer. So it became a lot of people really became allergic to consumer. But if you think about it, all the biggest consumer companies in the world are consumer. So at some point we need that. Like it's a huge part of our economy, and it needs to be financed. And a lot of people are talking trash about Europe right now, but Europe has consistently proved to be great in consumer, whether it is with startups or here, let's say in Paris, France, with companies like LVMH or in gaming, whatever it is. We have great taste if we are given the tools to do so. And so for us, it was like, this is the reason of intuition existing. And at the same time, I was fortunate enough to see how the AI infrastructure was building. So we were doing like a small piece of the value chain of how you could train AI back then. And I could see companies like Scale AI, Applied Intuition becoming huge. Obviously, then there was the ChatGPT moment with the LLMs in 2022. Even back then, we were like, okay, like all this infrastructure is going to fuel a huge wave of innovation for consumer applications to be built on top of that. And same thing, over the past few years, we said all the value or in the models. But right now, we're seeing it is going open source. DeepSeek a few weeks ago, for example, was a big topic of conversation. If everything is going open source and you have like maybe a handful of players fighting for the models, like the real wave of innovation is going to come from those ChatGPT wrapper that people used to call, of those founders actually really understanding like what type of products you need to build for your users. And so we're super excited about that and thinking, okay, there's a new technology window opening up again for consumer on top of like the macro environment. This is why we need to build a fund like Intuition to serve that opportunity.
On the AI point, I get you 100%, and I've been thinking the same thing. I just can't help but wonder, I'm kind of missing to see those AI first consumer companies, hit the market. And maybe it's just because I'm informed, but I can't help but think that there are so many incredibly easy, low hanging opportunities to capture
I
with
mean,
AI? Because basically in consumer world, we have a very high threshold for incorrection or not being correct. As soon as you do something in business, you very quickly need to know that what you're putting out is correct. I was saying to my friend the other day, can't believe why I don't have an app that goes in and says, this is everything you've purchased from your grocery uh, apps, the 15 different grocery apps you have on your phone, Andreas. This is what you should like probably need this week, right?
yeah,
You bought a bell pepper last week and you've been doing so every week the last 12 months. You're probably going to need a bell pepper again this
yeah.
week. Like, seems like the most simple application, but I'm just not really seeing it.
When a wave of innovation comes like that, first of all, 99% of the companies built on top of that are going to the floor, and you just have to accept it.
Yeah.
It's new. At the same time, you always, overestimate what you can do in a few years. You underestimate what you can do in a
Yeah.
lot of years. And so you end up with a lot of companies basically under delivering on what they're building right now and failing to go to market and actually have like a financial use case. For example, the need that you have might be very personal, or a lot of companies don't think there's a market big enough for that to go after this and solve it. And you have a need right now, but how much are you going to waiting? How much are you willing to pay for it? Those are like very different factors that make a company work or not. But I feel for us, at least when we dabbled around that thesis with Hugo, we're like, okay, what is likely going to work in the next few years? And we had very like good examples in our portfolio as angels of companies that were working right away, or even companies that we did with intuition in the first batch of companies we backed. And I think it was actually even shown by so Jensen Huang, the CEO of NVIDIA, a few weeks ago, he did a presentation at the CES where he showed where he saw the AI opportunities going. And I think he mentioned that we were in the stage of opportunity where you could enhance creation. So for like marketing tools or automating content, and ChatGPT is great for this. For example, like it's great at enhancing the way you create output like text. And all those tools that are enhancing your creation for photos, videos. I think it's an amazing time right now to back companies like that. We back companies in that space, like a Delphi, for example, was enabling you to clone yourself, and now you can offer your service as an assistant to anybody. We did a French company called Arjo, was doing deepfake APIs, or even as an angel previously, I did a company called Scoreplay, which was basically building a product on top of like data annotation to enable you to better handle your media assets and distribute it to the right stakeholders. So there are use cases like this for those companies are all making cash, by the way. Like they are going to those thresholds of raising seeds from Z money with just not like a pitch deck, with like proper, like revenue numbers, ticking the boxes. So those are very interesting right now. There's our case.
Let's stay on that point a little bit. I've also noticed that the route to revenue is very short for this type of company because you're selling a service rather than maybe something that enables a service, or you're selling an end product that people will actually pay for. A lot of these applications. So I wonder, why is it that, or is this even going to happen, that the VC model of having to pour tons of capital into companies will maybe shift it a little bit? What's your view on that? Are you seeing much more capital efficiency and thus also the growth journey change for consumer companies? Or will we continue seeing Series E's with 500 million?
No, I think there's definitely use cases right now where a lot of people are wondering if the VC models that we had, or like the unicorn factory of like having benchmarks for each series and financing with like a certain threshold of valuation, is going to work in the future. Right now, a lot of people say we might be on the verge of witnessing the first, 1, 2, 3 people company becoming worth, maybe 100 million. Or we're seeing a lot of companies thinking we're going to do one round of funding, becoming profitable, never raise money again. We're seeing a lot of companies.
Etienne, how do you think about that company? Because as a founder, I love it. As a VC, well, I don't know if that's the profile I necessarily want.
Well, I think it's the same thing. Like right now, the IPO market has been completely frozen for like many
Yeah, too
years,
long.
and a lot of funds didn't get liquidity, and then obviously it's really not great for the cycle. And the same thing, secondary markets became a lot more efficient. So a lot of investors are actually getting liquidity from private markets. I think we can see with Revolut, for example, over the past few weeks, they did an IPO, just sold a bunch of shares on the secondary market because it's less painful as a company as you grow, I think, instead of, going public. And I think as an investor, if you're a first check into a company that grow into never raising money again, and then they sell, over, secondary shares for you to get liquidity, I think that's just fine, especially as a pre-seed senior investor. And that's why I think a lot of funds that became really big, especially at growth stages, I think they're stressing a lot more than we do. Like for us, at least the work that we do, putting small check at the beginning when founders need it the most, I think this is actually extremely valuable. And I'm not surprised there's a growth into, what we do, a lot of emerging fund managers coming, early stage, solo GPs, especially in Europe, because we're always a little bit late compared to the US. But I think this is the future. And I think a lot of funds like ours are going to pop up the floor.
Yeah, and I think that there's a good point to especially note this. So yours is a 10 million fund. Probably fund two is going to be a little bit bigger, but I think if you stay small and you do these small tickets, the second you start doing bigger investments, it starts, the exit route might be harder, right? When you're doing 200K tickets or 100K investments, it's not unlikely at all that in 8 years, if the company is performing well, the founders will be happy to buy you out. Like, because you need to return liquidity. They're like, well, we've built a massive business. You've been a big help. I'm happy to get more of the distributions. Whereas if you're 50 or 100 million, you're still a bit. You need this journey of where you'll end up having real liquidity from a real liquidity event rather than smaller secondaries transactions, probably.
Yeah. Well, it's a different job. Like I know a lot of funds, they're really involved in the operational. They take like very few bets, but when they come in, like they're super value add. But it is going to become survival of the fittest. Like if you don't really add like a clear value, you just shouldn't exist. And I think this type of companies are going to expose you right away. And I think for us, at least we go in our DNA, I don't think we want to grow above like the $30 million threshold. I think we just want to stay. This is what we're called intuition. We want to be at the beginning, super agile. I don't think there's even like size for the consumer fund to be like 100 million plus and backing all these consumer companies. I think this is really like, at least from what we assessed, this was the best economic opportunity that we could come up with. And yeah, I think our DNA is rather stay small. You get a lot better chances to exit your fund as well. And as we start, I think, 10 million for us was the perfect size. We don't want to be much bigger. Like obviously it's not a lot in management fees, but it's very aligned with the performance you have to put on for your LPs basically.
Now I think you have a guy like Levels.io, Peter Levels, that many will probably have seen from X and LinkedIn. He's posting a bit as well. Like he's churning out consumer app after consumer app, or small consumer business after small consumer business. They're not. None of them are probably going to, IPO. But had you, shares in every one of those companies, and they were built by individuals rather than one individual, he's just incubating and building on his own because that's what he does.
Yeah.
I think that he's a great prototype of the fact that these types of businesses really work, and you don't have to raise tons of capital for them, and you can still make a lot of money. Interesting guy. Anyone who thought what I said was interesting, go and listen to Lex Friedman's podcast with Peter Levels, also called Levels.io. Definitely worth a big listen. Now, I want to ask you, Web3 is AI, not crypto. That's an interesting piece that you guys have written as well, and I think it's definitely something we should talk about. Andreas and Horowitz have said it as well. Rather, they're saying that Web3 is going to be incredibly important for AI, and then AI is kind of the problem that Web3 has been looking for, maybe.
Yeah, I think once again, I'm gonna give a lot of credit to my co-GP Hugo for writing this piece. He centralized a lot of ideas that we had. I personally started investing as an angel in like 2018, 2019, maybe a little bit more later on. He started earlier than me, but we did see after everything that happened with like mobile and the cloud and kind of like the golden years as an investor in the 2010s, we didn't have much. And then crypto came in and you're like, oh, this is the next wave. And then everybody knows what happened. Obviously, there's a lot of great things happening in crypto. It just wasn't as big as we thought it was going to be, especially with like the NFT craze and stuff like that. So a lot of people just got really disappointed at innovation at large. And when AI came in, they were like, oh, this is another, Web3 wave. It's going to fade away. Is it actually a platform shift like we had with internet or the mobile phone? And for me, like that's kind of always the same with innovation. Now it's like, how do you assess when a technology is very transformative? I do have to admit that ChatGPT feels a lot more transformative than changing my profile picture from like a name, let's say. Obviously, I don't want to talk trash about Web3. I have bad companies in the space, and some of them have amazing use cases. But what are
Especially the Bored Ape Club and so on. Absolutely.
yeah, and they're still like a great company. They built a great brand. I don't know if they will match ever their valuation and how they're doing.
Probably not.
That's another topic. But at least for what Hugo is arguing in his article is we really went from like the write, read, own to potentially more of the phase of accessing information, what we had with internet, then distributing information, where we had obviously the evolution of internet, what we call Web 2, and then Web 3 is actually completely transforming the way we create content. And it kind of goes back to what I was saying and what I think is the biggest opportunity right now. If you're enhancing us to create like gods and connect like humans, I this actually feel really transformative for us. I think Hugo, even last time he wrote his article, I think he basically used AI for the most of it, and the human became, I edit my article to make sure this is me. But like AI did the bulk of the work. And I think we're going to see those kind of applications over and over and over again for many things, as long as you manage to work with the technology. But we really feel, and this is the center of our thesis, we really feel like this is transformative. Half of the companies we are backing are in that space. And we strongly believe AI is that wave that everybody has been waiting for.
There's a topic that I like, and something that it was the create like a god, connect like a human part, and the fact that Hugo wrote everything here like with AI hugely enabling him. There's something that I keep thinking about, which is the age of AI. AI is really changing every one of us from being, a creator of our own, or creating everything ourselves, to rather being a manager of different agents and different tools that do stuff for us. I have managed people before in a marketing department and in a research department and so on. When I then went from that into building EUVC as a solo, or not as solo founder, but as a founder together with David, working solo without people employed, all of a sudden I was doing everything myself. And then what I'm seeing now is that in this age of AI, I've returned to kind of having the same processes of how I do things and how I think about my work as I used to do as a manager. Because it's this manager capacity to be able to manage that I have instead of having 3 different things that I do, I now do 15 things. I get work, so to say, let workflow start. Now it's not yet agentic, but it's going to be, right? That you'll start in a workflow and you'll let it run for a week, and then you come back and check, how did my SOMI posts this week work? And then I tell it, no, you actually need to change the tone a little bit to that, and blah, blah. And then you leave that running for a week and you come back to it, which is exactly what you do as a manager, right? You have this person reporting to you, talk about what works, what doesn't work, you adapt it, and then you come back to the junior individual a week after and see kind of how that worked. I can't help but wonder, is the average individual or the normal person equipped to work like that. Because where I am, I've always thrived in this type of environment because I'm super comfortable with uncertainty and super comfortable, dealing with something for 30 minutes and then letting it run for a week and come back and see if hopefully it went well, right? And I'm not awake at night. I don't stress about what's happening here. But I know a lot of people that are super good craftsmen with whatever they do, be that research or be that whatever, right? But give them 8 different things that they have to like keep an eye on and only touch peripherally and that type of thing. They would stress the fuck out.
I mean, I'm not surprised. Obviously, I think some of the great qualities that founders have in general is that they are able to, multitask and do several things at like a super high level. But the most important thing for me is really like your willingness to try new technologies, being curious. Else you're going to be left behind. And I think there's a clear sense of urgency if you go to a place like the Silicon Valley. You really feel like people actually scared for their jobs or not taking advantage of the opportunity. We don't feel that sense of urgency here in Europe yet. And I don't know if it's ever going to get to the level of, what you can feel when you're in the Valley. But this is going to be completely transformative. Hugo and I, for example, we are obsessed with automating everything that we can do with all the tools that we have. Because if you start getting left behind, you're going to feel like your parents when the mobile came in. Like, this is legit what's going to happen. And so the new generation, they're going to be born with those tools. I think they already performed studies where they are seeing that high school students were using ChatGPT very frequently. They are now having difficulties to form like full opinions because now they think in prompts. So they're thinking of like really small segment of the way you think at large, because they know AI is going to complete the rest. A little bit like before you had to be able to do calculus. Now you have a calculator on your phone. Why would you care about learning to do it? And so I think there are a lot of full tasks that we're just going to eliminate from our day-to-day. And the quicker you get to automating everything and being comfortable with those tools, even if you have to force yourself to use them, you have to do it for your survival, I think, as a founder. Otherwise, you're just going to be left behind. And it's going so fast right now. All the, even the pace at which OpenAI is shipping new models, new features, new things, killing hundreds of startups along the way. If as a founder, you don't have that sense of urgency, it's going to be very difficult. So yes, you have to be multitasking. Yes, you have to learn new things. And yes, you have to be able to try new tools. A bit like a gamer when you were a teenager, like you will, go online, teach everything yourself. Like those are the people who are going to create the most values in the next few years, because you're going to have all those tools available, all those agents, all those, like software tools that enable you to do all these things.
Yeah, I completely agree. It's going to be such an exciting time, and
it's an incredible time, to be honest, to be in this space, especially as whether you're a founder, investor, or you're working with those communities. Like it's amazing.
I have to say I'm in love with consumer these days, because it's so interesting what's going to happen in this space, and I can only see it transforming everything. So yeah, Etienne, thank you so much for coming on the podcast, man.
Thank you for having me. I really enjoyed our conversation, and I've been a long-time follower of the podcast, reading it, especially when I was starting as a angel and then fund manager. So super happy to be able to share, like my journey and knowledge I acquired along the years.
I'm really happy to hear that. Like, it means so much that the podcast actually makes a difference for real people like you that go out and build something. So thank you for saying that, Etienne.
Yeah, it's awesome. You guys are doing an amazing job.
This was their finest hour.
Tear down this wall.
It's more than just an alliance. This is a union of values.
Let's start acting.